Now, 2016 was not a bad year for everyone. In fact, it was a year to remember for gold fund managers like Ian Williams. The way Charteris gold fund he runs was the top UK mutual fund for the calendar year 2016 across all sectors and amid 6,000 funds. Also, it outperformed the second best gold fund by 38%. Good morning, Ian.
Morning.
Now, Ian, congratulations. What a great performance last year. What do you think was key to your outperformance against other gold funds?
Well, there's about 7 or 8 specialist gold funds or gold and precious metals funds in the UK, and ours is unique in that it's 70-80% in silver miners as opposed to gold miners. Wow. And the outperformance came because silver did better than gold.
Okay, so let's talk about this year now. Okay, your outlook for 2017. Well, let's start with silver then, since you like it a lot.
Well, the theme now, everyone seems to be last year they weren't, but this year everyone seems to be jumping on board this deflation ending, inflation starting, cycle changing. Now, we would agree with that. A lot of people are putting it down to Trump. We would disagree with Trump being the cause. We think that cycle was turning anyway. And the markets were starting to turn long before Trump even won the Republican nominee, never mind the presidential election. So we think this was going to happen anyway. We think the cycle was turning. But we would agree now with the consensus that it is turning. If that's the case, all the equities that are asset-backed, like mining stocks that have real asset backing or property shares, anything that benefits from inflation is now going to continue to outperform. So we think you're going to have an even better year this year for gold and silver, but this year you'll be joined by the base metal mining companies like BHP Billiton and Rio Tinto, and we think the property shares are going to have a very good year as well.
Okay, what's key, I suppose, right now is to find value across the sector, given that shares, across the sector have already risen a lot last year. So how do you identify value then?
Well, we like things, we're a bit contrarian, so we like buying things that are out of favour. So, for example, our equity fund, which had a good year as well last year, that was third or fourth in the equity income sector. That second biggest exposure is to house builders and to property shares. Now, they got absolutely trashed after the Brexit vote, so they're bombed out. So although the FTSE's at an all-time high, a lot of these shares like Taylor Wimpey, they were £2 the day before the Brexit vote. They're now only £1.69, So we think there's a lot of value there and a lot of catching up to do. But we don't think they'll beat the miners. We think the gold and silver miners in the UK will do better than anything, Fresnillo and Polymetal in the UK listed stocks. Then we think the gold shares, and then the base metal miners like Rio Tinto and BHP Billiton, which our equity fund has also got big exposure to. So we're playing the reflation trade across all the funds, really.
And last year, Ian, you had a significant exposure to Canadian companies, Canadian gold and silver in the gold fund. Okay, will it remain the case this year, or will you diversify a bit more?
No, we like Canada as a jurisdiction. We like Canadian corporate governance. Most of the companies in the gold fund are Canadian-owned companies mining silver in Mexico and other parts of Latin America. So they're really top-quality companies, and if we sold them, we'd struggle to replace them with companies of equal quality. So they're just a pure play on silver going up, which we expect to happen. We think silver and gold are going to go up much more in percentage terms in 2017 than they did in 2016.
But are there companies you would avoid in a sector at all costs?
Well, we don't buy any South African gold mining shares.
Why is that?
For a variety of reasons, not least actually that it used to be the most, biggest gold mining area in the world. All the easy gold has been dug out and has long gone. They're digging out more and more rock with less and less gold in it. And then there's the political situation is not good. The electricity supply keeps getting cut. There's a whole variety of reasons why you can make enough money in this sector without taking on all the additional risks of investing in South Africa. So we avoid South Africa for the domicile of the mining companies. We don't own any South African domiciled mining companies in the gold fund at all. We never have, and I can't really see that we ever will.
Okay. Ian, thank you very much for your time this morning.
All right. Cheers then.